What's up, guys? So back with another video. As promised, I'm going to start uploading once or twice every single week. It's either going to be on a Monday or a Friday or both. I'm not sure yet. It just all depends, but I'm sure you guys are going to really enjoy this video. I just want to go ahead and say thanks for all the positive feedback you guys have been giving me on my most recent upload and all my old previous videos as well. I put a lot of work and time into them just for you guys. ICT and smart money concepts is not easy to understand and learn, especially when you have all these fake gurus out here, trying to teach these things, but they're not teaching it the correct way, and they're doing more harm than good. So this video right here is going to be specifically about how to find a daily bias, how to frame a trade daily. I just said that kind of weird, but yeah. So it's pretty much how you can find your bias. Is it going to be bullish or bearish? And we're going to start from like top down, and we're going to start on a daily chart. And just like every other video, there is only a couple things I talk about, and I just repeat it over and over. So the more you guys understand this and watch this, the more it'll make sense. Nothing changes. It's all the same. So when I look for entries and exits in my setups, no matter what time frame it's on, it's always going to be in the form of these institutional reference points. So it's either going to be order blocks, breakers, or an imbalance, which is just inefficient price action, which is also in the form of fair value gaps, volume imbalances, voids, old highs, old lows, and BISIs, CIVIs, all the inefficient. It's all those things go up in the category of inefficient. So when you hear me say fair value gap, someone might say, oh, no, that's a CIBI, that's a BISI. Yeah, well, it's all in the same page as an imbalance, which is inefficient price action. So all those, and then we have liquidity and order blocks and breakers. And keep those in mind. So I use only those when it comes to entries and or exits. So keeping that in mind, we're going to have this example with USDCAD. We're going to start at a daily chart. Oh, what's that? What? I'm on my profile and it's saying I have to upgrade. So I can't use the replay button. That's stupid. But I can send you guys a screenshot at the end of this video or post it that this was actually shouted out before it happened for educational purposes only. I'm not known as a hindsight trader by no means. None of my examples are hindsight. I run a Telegram group, which is private, and everyone in there sees me do it every single week. All directional biases and live signals as well. If you want to be involved in that, all you have to do is message me on Twitter, which is just my name, finesse_fx. I'll have a link to that in the description, but that's not what I'm doing this video for. I'm not trying to promote that, just throwing that out there. But so let's jump into it. Like I said, we're going to start at a daily chart. So before taking a setup, I like to see where price is at. Everyone knows dollar index has been rallying higher. I don't like to call tops when price is going higher on a higher time frame. There's no need to do that. I don't like to trade against the trend. The trend is your friend, remember? I stick with one side until I'm proven wrong. That's how I trade. And it's been very beneficial for me. It avoids trying to catch those falling knives and calling tops and bottoms of the marketplace. You can let all the professional geniuses on social media do that. So pretend none of these candles are here. We have USDCAD. First thing that sticks out to me is that the fact that they ran these equal lows here. So they targeted equal lows, which is liquidity. So there's going to be stop losses resting under here and sell stops. This is known as the ICT turtle soup. Then they go higher. And then keep in mind that bullish DXY. Okay, let's say you didn't have the guts to buy right here. That's okay. Once we get that expansion up, see we have consolidation, manipulation, which is the move lower. And just in my previous video I just uploaded 2 days ago, or it might have been yesterday, I went over this deeply, and I'm going to say it one time again. Before price moves on these higher time frames and lower time frames, they always tend to stop shy of their intended target before hitting it, and then they go sideways. Please go look at my last video for this one. Like I said, it was just posted yesterday, and you can see me talk about that and show multiple examples of that. And here's another one. Here's another example of that. So their target was these lows right here, obviously, right? Yes, Grant, that's hindsight. Okay. Well, then they go sideways on a daily chart. They dip down once here. There's their target under the lows. They go sideways again. They're still in this range. Then they do it again one more time for all the traders that thought this was a bottom right here. So they put their stops here. They do it one more time. I don't know, and there's no way that I can tell that they're going to do this again and come back down one more time. That's why I simply do not try to call tops and bottoms in the marketplace. But once they do that, so you're sitting on your hands and you're waiting for them to tip their hats off to you. We're looking for high probability trades only. So once that happens, and then they give you what is that? The shooting star candle print? Isn't that what some guys call it nowadays? But this is an instance where it actually worked. It's a reversal candle pattern. This one is. Anyways, I don't trade like that. So they take stops. That was the intended target under these lows. They go sideways, so it's accumulation, manipulation, which is the move lower, and then distribution. So now we got the move higher. You have to keep in mind, you have to be able to tell yourself, what did they just do? What has this market done previously? And how can I get in sync with it? So you want to tell yourself the lows have been ran. We have a bullish dollar index. We're not trying to call a high on the dollar index, so we're going to stay bullish on dollar currencies. So here's the displacement, higher, accumulation, distribution, displacement, higher, and they start going sideways again. So before going any higher, they're going to have to come back down to a discount before moving higher to a premium array. Let me go ahead and do something for y'all. So here's a swing low, right? And then here's a swing high. You're still in your hands. You haven't done nothing yet. You're waiting for a signal. Remember the key elements to a trade setup that I just gave out at the beginning of the video. All of my entry and exit patterns. Order blocks for value gaps and any form of inefficient price. My replay editor button is not working. So you guys can already see what happened here. But here is our daily order block that was formed. The last down candle before the price move higher. We have to wait for it to come back down to a discount before entering long. I'm going to put my swing low at the bodies of these candles. The bodies of this swing high. So swing low to swing high. Anything below 50% is our discount OTE entry. You're going to blend that discount entry with the fact that we have a daily fair value gap right here. Just going to be this candle's high. This candle's low. The candle in the middle is the imbalance, the fair value gap. It's one singular candle up. They never dug down and rebalanced it. You're also going to blend that with what? The bullish daily order block, which is the last down close candle prior to the rally, the aggressive rally higher. So it's going to be this bearish candle. And remember, I'm talking about all of this only because of the context of the overall price, how it already ran stops here. We're bullish dollar and we're going higher, and they're showing us that here. So swing low, swing high, fair value gap, order block. And you can see the precision of that daily entry right there. I always use the wick of the order blocks down to the body as my entry because I don't know how far they're going to dig down, but when you blend it with a fair value gap like that, it's a lot easier to catch it. So you're blending that fair value gap with your order block with the OTE from swing low here, swing high here, anything below 50%, order block, discount, buy. So where are we going to look to target? Same thing. What are the elements to a trade setup for me? I named up twice now. You got it. We're going to look for order blocks. We're going to look for any type of inefficient price action. So right away, we have an old high here. You can see the reaction higher. We have an old high here. They're going to head to a premium more than likely. So I'm going to draw a fib from the most aggressive swing high to swing low inside of the trading range that they're trading in. So I'm going to take this swing high down to the swing lows here. Anything above 50% is a premium. Do you see any PD array in the form of those trade elements? Yes, anything above 50%. Yeah, I'm going to take this off. So you know 50% is here. They've already hit that, and they stop. Once they come to equilibrium of this trading range, they have to come back down to that discount before going any higher to another premium. So what do you see? What do I see? I see this fair value gap here, which is going to be this candle right here. The candle's high here, and this order block. This is an order block as well. It's the last bullish up close candle prior to super aggressive daily back to back to back to back to back bearish down move. So there's our order block. There's our fair value gap, similar to the order block and fair value gap here, but this one's on the premium end. So after they've taken stops here, they've done what they need to do. We have accumulation, manipulation, distribution, redistribution, discount, order block, fair value gap, rebalance. Now we're going to go higher, I believe. So this is my thought process on USDCAD at the moment. I don't ever look at this pair, but this was too sexy not to talk about. In the coming days of this week, I believe we're going to see USDCAD trade higher above this high into this area right here. So that's my thought process on CAD at the moment. And let's go back real quick. So this candle, when we had that daily entry here, it was April 14th. Let's go look at the dollar index on April 14th real quick. So April 14th would be this bullish candle here. This is the dollar index. It's been rallying like a mofo lately. So we're not trying to call any tops on that. But let's look at April 14th. What happened that might have made CAD do that? So April 14th was actually right here. This giant bullish move on dollar was the catalyst for that USD Canadian dollar trade setup I just showed you on the daily chart. We have equal highs here on dollar. So people that are trying to call tops on the DXY, on the dollar index, if they caught this sell-off right here, where do you think their stops are going to be? At this high, these equal highs. Prior to that, they did take out resting liquidity in the market before going higher. So you want to note that. You want to tell yourself that we're bullish dollar, we're bullish dollar. So that means any pullback that takes out liquidity or trades to an array in the form of one of the trade elements that I went over is going to be just a retracement to go higher. What do? They take out liquidity here. They take out these equal lows right here. So when they do that, you should be thinking, okay, this pair could go higher. You want to also note that there is imbalances all right here inside of these red large singular candles. These are imbalances. It's way too large of a candle. They never offered it to the buy side. They never traded up. You see no wicks here. So that's an imbalance. So that tells us that they should probably want to rebalance this in the future. And then you see the huge bullish move. So you blend this dollar, bullish dollar, with the setup we just went over here. So let's say you missed the low on CAD. Let's say you missed, even if you missed or you weren't brave enough to enter down here, which I never am brave enough, my entries are going to be in the form of this right here that I went over. That's my go-to A+ setup. I'll take it 10 out of 10 times. But let's say you missed this too. Don't give up. You don't just close your computer screen or your phone or whatever you're trading on and say, oh, I missed buys on CAD. No, because where's the overall target? We already discussed it. We're going to be trying to target here. Okay, a premium array inside of our trading range. After we told ourselves this is probably going to keep going up because they are respecting bullish trade elements. Like I've been saying, they respected this as a false move lower, then they go higher. They respected this fair value gap plus order block. They're going higher. They keep respecting all the bullish arrays. If you missed that, it's all right. You're going to scale down to a lower time frame. Just look at the 4-hour time frame. See anything? Oh, yes. Forgot to talk about this too. So you can also blend this 4-hour chart with that daily chart to get more confirmation of that daily low on CAD. Let's do that right now. You can look at it, you can scale it down and get it even a more refined entry. You see this candle's low? Yep. And then this candle's high, the candle in the middle. There's your fair value gap. Look how they respected that level. Boop. What else can you blend that with? You can blend that with a breaker, an ICT breaker, which is going to be this bullish candle right here, this green large bullish candle prior to this aggressive down movement. Why'd they do that? They did that that's how they took out stops here below this low, which also was a move to take out those daily lows we discussed over here. One more time, to dig deeper. So you're blending all this stuff together. All of this stuff. This is how the algorithm operates. So you always want to look at all time frames because you might not see this. You can get a refined and more confident entry. So you have all these confluences on your side. Most importantly, we're bullish dollar. We have a classic 4-hour bullish breaker setup that blends with a 4-hour bullish fair value gap. So this is an ICT breaker. Again, the bullish candle prior to this aggressive move lower, which was a false break below the old low here. They trade higher. Once they trade above this high right here, that's a break in market structure. You sit on your hands and you wait. This is them engineering the setup. They come down right here. Everyone's thinking CAD is bearish. Nope, but we're not. We're not thinking CAD's bearish. We're thinking it's about to be bullish. We're going to get a really good entry. And then you can go swing low here, swing high, OTE. So this is the refined entry. That's how you can get really confident in your entries. And when I see setups like this, I'm going 5% every day. I've been doing this for a long time, so I'm able to trust 5% risk on my trades. But when they look like this, not every trade I take is this beautiful, but this is a beautiful example. That's why I'm going over it, and I'm gonna give you guys privilege to see this. Privilege. So let's say you missed this low though. You didn't catch the low here and you're bummed, okay? Let's go down to the 1 hour time frame. You see anything you can take to get in sync on April 14th? I don't see anything on 1 hour. Okay, let's drop down. Let's look at the 30-minute. And again, once you see that reaction here, we're going to look for our trade elements, the target. Imbalance here, and imbalance here in the form of a fair value gap, which is also a premium. Swing high here, swing low here. It's a premium market, anything above 50% of your fib. I don't see anything on the hourly. Let's look at the 30-minute. I see a high in sight 30-minute bullish order block here, but that was towards that was after the daily high was made. So we're not, and that was at 2 p.m. in the afternoon. So we're not interested in that. We want to stay inside of our kill zone. That's another thing I want to mention about the daily low on CAD with the daily chart and the 4-hour chart. You want to note the time of day. That is a huge factor. It was exactly 7:30 when the low of the day was formed on CAD. That is the heart of the New York kill zone. So those are your kill zones. You know, you got London and New York. That was New York kill zone. They start going lower, everyone's going to be chasing that, thinking it's going lower. But we're aware of our overall surrounding. Kind of like when you're driving a vehicle. You always want to be aware when you're driving your vehicle in traffic of your overall surroundings, right? So you don't get into a wreck. So think of a bad trade, that's your wreck. You never want to get into a wreck, so you never want to get into a bad trade. You want to do everything you can to prevent it. So being aware of your overall surroundings, which is pretty much, you know, your higher time frames, that's a good way to prevent it. So do you see anything on 30-minute? No, that means I'll drop down to 15. So this is how I call the trade right here on CAD. I actually missed the daily low here, but this is exactly how I got it. And I saw nothing on the 15, so then I go down one more to a 5-minute. What do I see on the 5-minute chart on this day, April 14th? Because I know we're still inside of our kill zone and the daily high was not made yet. ICT teaches us that there's a 75% chance the daily high or low is going to form around 11 a.m. to 12 p.m., which is 1 hour after 11 a.m. That sounded confusing. So if you're a day trader and you want to get in and get out, you want to enter within a kill zone, which is either London or New York, and you want to get out of your trade at least by 11 a.m. Sometimes you're going to get out too early. Sometimes you're going to get out too late. You hold your trade after 11 a.m., look what would have happened. They're going to come down. So that's why ICT teaches us that the daily highs usually typically form inside of these time zones, inside of that time of day. And you see it right here. It's true. If you don't exit by 11, right here is 11:50 a.m., very high of the day. If you don't exit there, which is blended with that 1 hour premium and balance. So this is what he means by blend time and price. 11 a.m. right here, high of the day, formed inside of this fair value gap, this imbalance, which is also a premium of swing high, swing low. So that's what he means by time and price. So let's get to my entry that I took on this trade. At the end of the video, I will show proof of that. It was called out live to my whole entire Telegram chat before it happened, the entry was. And I will show that at the end of the video, but So I noticed today's going to be a bullish day on CAD. They're going higher and higher and higher. I want to get in this. I want to get in this trade. I want to get in. I want to make some pips. I got to find a way. So I could not see anything on the hourly chart. I couldn't see nothing on the 15-minute. Couldn't see nothing on 30-minute. So now I'm scaling down to a 5-minute. And yes, I see something. What do I see? I saw equal lows here. I saw fair value gap here, very tiny. Then I saw this bullish 5-minute order block. So this was our buy limit right here. You can do your swing low, which is here, up to swing high, which is here. Anything below 50% is going to be your discount buy or a trend continuation for this pair. So there's your fib. Now I'm going to take it off. So what do? They come down. Traders are going to start selling this pair, thinking the daily high is intact. Nope. We're sticking with our daily bias, which is bulls. They take out liquidity here, take out the fair value gap, or fill in the fair value gap, take out liquidity here. All this accumulation right here, this consolidation, they trade below it because traders place sell stops and stop losses here. So the algorithm triggers that. It fills in this fair value gap to make it efficient now. And then it also hits the 5-minute bullish order block. Or just shy of it, actually. Unless that line's on there wrong. But I don't set my limits at the order block. I set mine fair value gap when it's blended with an order block. I believe the fair value gap is the order block, to be honest, because I never use order blocks unless they have a fair value gap. So when I see them blended together, that's why I put my limits, or I'll enter inside of the fair value gap. I believe they're made to be together. So yeah, that's how I got in this trade. And then they go higher, and like I said, I would hold towards 11 a.m., 11:30 a.m. to target one of the trade elements, which is here, fair value gap, and imbalance right here. What else is that level? I noticed that level was also a 4-hour bearish order block. This bullish candle prior to this super aggressive down move, that's a bearish order block. That doesn't mean that's going to be the high on CAD. You do see a reaction here, yes, but we're actually overall bullish from the daily chart and the dollar index. They did react lower, but that was just for this daily high. All right, guys. That's pretty much it. Hope you guys enjoyed it. I do believe CAD, I think it should continue higher as long as the dollar index can keep coming higher. I think CAD's going to want to trade up here around 1.27 big figure also. So we also can blend a big figure of 1.27000, which is inside of our PD array that we're trying to target. I can't tell you what the weekly and monthly look like. Let's look at that. There's weekly. And here is monthly. We have plenty. We have lots of liquidity up here. Let's look at that. We have all these equal highs up here. Then we have a lower high right here. So that's a low resistance liquidity run. We also have a little fair value gap right here on the monthly. Depending on how bullish this dollar is going to be, we could see. And I want you guys to notice these highs right here stopped short of the fair value gap. There's another example. Like I said at the beginning of the video, and the example I gave, how they stopped shy of their intended level. Just like I want you guys to go back and watch my video right before this one. And I talk about it a lot, but here we are again. They're consolidating on the monthly chart. just under this fair value gap. They stop shy, build liquidity, and hopefully we'll see this thing pop up higher. But first things first, one thing at a time, I'm going to try to get in another buy and target this level here. And here's those highs on the monthly. And then there's that monthly fair value gap as well, which could be our overall target long term. All right, guys, hope you enjoyed it. If you want to be a part of my VIP private Telegram group, just go ahead and send me a message on Twitter, and I'll get back to you as soon as I can. It is a one-time entry fee just to keep the trailer trash riff-raff out, because you know how people are nowadays. And there's not a lot of noise in our group. Everyone's serious, and they all want to develop. And we host a live Zoom session every week, or we try to at least. But you can ask questions, do all that stuff. And I'm in there all day, every day, bullshitting, hanging out with the guys, you know, just having fun. You know, it's a really good vibe. And also, you'll receive two links. You'll receive a private Signals/educational channel, and then you'll receive the private group chat channel as well. Signals channel is only me, so it's view only, but the group chat channel, everyone can talk in there, and I post in there every day, all day. You can ask some of the guys. I'm posting educational charts all day, every day, dropping gems. So it's definitely worth the one-time fee, if you ask me, because I don't believe there's anyone out there other than ICT himself that can trade like me. So yeah, that wraps up this video. Hope you guys enjoyed it. I'm out.